Welcome to the Aul Financial Hour Podcast with Steve Aul.
According to the U.S. Census Bureau, over 10,000 baby boomers, they turn 65 each and every single day. Think about that. That means they're making their decisions now about Medicare and Social Security. Here is Jill Schlesinger and Teresa Giarducci on CBS Mornings.
There's been a 13% jump this year in people claiming retirement benefits early, despite permanently reduced payouts. Would that then argue that you should claim Social Security early?
Because not yet.
Okay.
Not yet. Wait for the maximum benefit. Don't haircut yourself now, anticipating it will be cut later.
Well, here's the deal. Lots of folks are basing their decisions on when to claim Social Security. It's all based around fear, especially today. It's all about, is Social Security going to run out? What do I do? Steve, what's your response here?
I look at it as you can go two routes. She said, wait, delay as long as possible. I look at Social Security as an optimization, not a maximization. Because I do agree the maximum, if you both wait till you're 70 and live to 95, that's the most that you're going to receive. But I have to look at it more in a different light. It's a different thought process if you're single. If you're single, I look at the most thing that I have to look at is longevity. Because if somebody starts at 62 or they wait till they're 70 as a single person, at around 80 to 81, if there's break-evens right around there, that they'll have received the same amount of money. So if you're going to live past 80 to 81, delaying is the most important thing that you can do. That is if you have the assets to be able to delay. Now we talk married couples. There's 9 different years of filing strategies in there. So we can't pick that easy number like that to say, here's the break even. I looked at it and say optimization. And the biggest thing I want to optimize when I'm looking at a married couple in Social Security is, what's the survivor's benefit going to be? Because somebody is going to probably pass away first. What will the survivor get to keep? Mm-hmm. And the amount of the larger Social Security will stay. If you were the person with the higher wage, you'll keep yours. If you're the person with the lower wage, you'll get yours plus enough of theirs to approximately get the exact same amount of money. So I believe that optimization is the most important thing for married couples. Most people don't realize that if you start at 62, and if you were born in 1960 or after, the full retirement age is 67, you're going to take a 30% drop to get that check. The difference between the check at 62 and 70, it's a 77% increase every month, plus cost of living. So those are the things that we have to look at. I believe Congress will do something to keep Social Security where it's at. I believe the fear of I'm going to take it now because I might not get it in a later is not a good thing to do. So if you do not have a Social Security optimization, give us a call. I will let you know to do Social Security, I have to do a full plan. I have to make sure that you've got the money to be able to delay taking Social Security before I can possibly recommend that.
Our friends at the Federal Reserve, they are continuing to pause on interest rates, and that leaves 4 meetings for it to do any rate cutting this year. Here's economist Lauren Goodwin. She tells CNBC that the Fed will do as little as possible for as long as possible.
The Fed can only do so much to tackle things like changes in trade policy, changes in the political environment, geopolitics playing a bigger role in inflation expectations as an example. And so the only thing that the Fed can do is look at its tools related to interest rates and decide whether it can move the needle on inflation expectations. It's an uncomfortable position for investors and for the Fed as well to have to wait and see how the data evolves, but we expect them to try to buy that time.
Yeah, but here's the deal. If you're close to retirement, this is not the time we need to be kind of just waiting around, right? So how do you help clients tune out all this economic noise that we hear and focus on what we actually can control?
Well, when it comes to the Federal Reserve, I believe that interest rates went down way too slow. And then after the pandemic, they came up way too slow. And I think they're slow at the seat right now. But I look at it, how would you like to drive to work tomorrow? And the only thing that you can look at is your rear view mirror. The rest of your car is blacked out because that's the only thing they're looking at. What happened in the past? and they're trying to drive us forward into the future. So I believe they do have a tough job. I'm not going to disagree with that. But I think 3 months or 4 months after is not the best time to decide, oh, we should have raised rates a while back. But they were slow coming in. They're slow doing what they're doing now. I believe they should have started to lower the rates because where she put it, well, it's the headwinds of tariffs. It's the headwinds of this. We always have headwinds and tailwinds. Do you remember like 5 years ago when one of the headwinds was the interest rates are ultra low? That's not good. I can't get enough at the bank. Now they're higher, but now I can't buy a house.
Yeah, it's kind of, yin
I
and
can't
yang,
get a car. They're the same things. It's just how is it affecting at the time? And in my opinion, that keeps economists on their toes because most of them don't agree. You can go to one news outlet and hear one thing and go to another news outlet and get another one. And I believe our biases will take us to hear exactly what we want to hear. So my deal of it is trying to shut down the noise. And the only way I can feel that I can help people shut down the noise of what's going on out there is what are you focusing on? And to me, if you've got a financial plan, it gives you something to focus upon. You know, when you start to look at it, how am I going to replace that income? Because if I've got some guaranteed income that meets my lifestyle, I'm not as concerned about what's going on in the markets, the ups and the downs, because I know that paycheck is going to be coming into the account each month, be it a pension, be it an annuity with an income rider on it, be it Social Security, or I filling a gap between my lifestyle and my expenses. If it's going to be there, that helps a lot. And then we talked about it earlier, Social Security optimization. How do I get the most out of that between me and my spouse? And then the one that everybody looks at, tax strategies. Yes, we're in historically low tax brackets. Most people don't believe that, but we are. And for us to take care of our debt problem, taxes will have to increase sometime in the future. So tax strategies, are you looking at those things? And if you've done a good job, how are you going to pass this estate on to your loved ones? So those are the things that we look at as far as the planning process. And then your investments. I believe your investments should be based on need, not greed. You know, give me the best return with the least amount of risk possible. And I think that's very, very, very important to look at, especially if you are getting close to retirement. Because those sequence of returns are so important. You know, think back, those of us that are old enough. What if we had retired in 1999?
Oof, yeah.
And we had 2000, 2001, markets bottomed out. Or if we'd have picked 2007, markets are at a high, but it dropped all the way down to 2009. Is your portfolio designed that you can get income out of it with whatever the market does? And I think that's the most important thing, is focusing on a plan. That way you can shut down some of the noise. So are you prepared for whatever the Federal Reserve does? Because there's going to be those of us that are for it and those of us that are against it every time they make a move. Call now. Ask for that comprehensive retirement plan. Let's sit down, allow myself and my team to help guide you through your retirement. Because the only promise I'll make, 4 or 5 years from now, we're going to have different headwinds and tailwinds that we currently have today. They're always changing. Are you ready for no matter what they're doing?
You know, when it comes to planning for retirement, creating income streams, we are all looking for what is the best of the best out there to give us those items. Well, I recently saw an article on Bankrate.com, and they called the Roth IRA the MVP of retirement savings. It talked about how, you know, they have the after-tax contributions and tax-free withdrawals. However, the Roth has limitations. The amount you can contribute declines and is eventually just eliminated at a certain level of income, and the money has to sit for 5 years before you can access it. So some tightrope there. So how can you work around these limits, Steve, and make your Roth the ultimate retirement MVP?
Well, again, yes, there are limitations on Roth contributions. And it's by your modified adjusted gross income. If it's as a married couple, if it's between $236,000 and $246,000, over $246,000, you cannot contribute to a Roth IRA account. Now, when people look at it, what about the IRA account? Well, the limitations on that for deductibility are a lot lower. $136,000 and $246,000, almost $100,000 less. So, I had somebody call me up and said, I can't make Roth conversions. Can I do non-deductible IRA contributions? And I said, yes, you can, but make sure you talk to somebody before you do it. Because of the fact, if you have non-deductible contributions in a traditional IRA account, you're going to be subject to what they call the pro rata rule. That means every distribution that you take is going to be part non-deductible, part deductible. Your accountant will kill you. Or you're going to say heck with it, and you're going to end up paying taxes twice on that money. So I'm going to sit here and say, if you've thought about a backdoor Roth, because I've had a couple people that have come into me, and when I look at their tax returns, they're showing me that they did backdoor Roths. Mm-hmm. And I looked at it and I said, you can't do that. And they said, well, yeah, I can. I said, no, you got $1 million sitting over here in your IRA account. They said, no. I put the whole $8,000 in one IRA account, and then I just moved the whole thing to my Roth. So 100% of that one IRA. I said, that's not how the rule works. The rule says you have to count all of your IRA accounts. I did it for my wife. I had to convert all of her IRA accounts to Roth IRA accounts. Now, I do have the availability to put $8,000 into an IRA account, non-deductible, and then convert it to a Roth later. The other thing that you get when that 5-year rule, the thing that I like about that 5-year rule is it starts the first year you have a Roth IRA account. So if you can contribute now and don't contribute again for 10 more years, mm-hmm. It started the year you put that first one in there. The other thing that is important to know, prior to age 59 and a half, you can only take your contributions out. You cannot take the gains out, but you can take the money that you put in out. So that's when I look at it, is if you're thinking about these things, talk to somebody that knows something about taxes and how those things work. Give us a call. I believe that reducing or eliminating taxes is the best thing you can do for a successful retirement. And I think backdoor Roths and Roth conversions are great when they're done properly.
Thanks for listening to the Aul Financial Hour Podcast.
Insurance products are offered through the insurance business Aul Insurance Group, LLC, AIG. Aul Financial Group, LLC is an investment advisory practice that offers products and services through Impact Partnership Wealth, LLC, IPW, a registered investment advisor. IPW does not offer insurance products. The insurance products offered by Aul Insurance Group, LLC, AIG are not subject to investment advisor requirements. IPW and Aul Insurance Group, LLC, AIG are not affiliated companies. Investing involves risk, including the potential loss of principal. Any references to protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims-paying abilities of the issuing carrier. This radio show is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual's situation. Aul Financial Group, LLC is not permitted to offer, and no statement made during this show shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by Aul Financial Group, LLC.
This radio show is intended for information purposes only.